Dear Board of Directors, we're delighted to be here with you today to present our findings. My team, composed of Pietro Toso, Marc Adrian, and Lukas Rüth, and myself, Charlène Golsteyn, are excited to answer the question which you tasked us weeks ago. Should Bandai Namco acquire Game Workshop? We believe that you should not acquire Games Workshop. While our first answer may have come as a surprise, do not fret. Bandai's vision is to become the leading innovator in global entertainment. Bandai's wish is to provide fun for all into the future. We plan to bring your vision to reality. Your goal for March 2025 is to connect with fans. You wish to leverage your IP access strategy, increase your international presence, and build a Bandai Namco metaverse. The metaverse will be a universe where fans will experience a new reality. It will change the way we consume and connect. We, at IFSA, understand Bandai's brand and the current market. We believe that instead of acquiring Games Workshop, Bandai should acquire Square Enix. This acquisition will propel Bandai into the future, helping it create a world of fun and connections. Square Enix is a Japanese entertainment conglomerate and video game company. It is best known for its Final Fantasy, Dragon Quest, and Kingdom Hearts role-playing video game franchise, among numerous others. So why this company and not any other? Well, first, Square Enix offers an impressive IP library, which is similar to Bandai's. Square Enix also will strengthen Bandai's international presence, a goal stated in its midterm plan. But also note that Square Enix is also headquartered in Tokyo, minimizing any cultural integration risks. Lastly, and most importantly, it has an extensive experience in virtual reality and augmented reality, key components to the creation of a metaverse. After an in-depth research and modeling, we propose that Bandai acquire Square Enix at a premium of up to 32.8%. Now, our proposition may have come as a surprise, but Pietro will now shed a light on as to why Games Workshop is a great strategic and operational fit for Bandai.
Thank you, Charlène. Games Workshop is a British manufacturer of the miniature war games. It is best known for its Warhammer IP, tabletop miniature war games, the most played in the world. The company enjoys a global distribution with a strong presence, especially in the European and North American markets. While its worldwide presence may align with Bandai's wish to solidify its position globally, the acquisition of Games Workshop would not align with Bandai's previously slated midterm plan. Effectively, although Games Workshop IP is among the most successful in the world, that is significantly different from Bandai's library, and it may not be useful for the creation of Bandai's metaverse. If the transaction was carried out for operational purposes, it would be still difficult to understand, since Games Workshop production facilities now run at full capacity, and its branded stores around the world are known for selling only Warhammer products. This would not help Bandai's own line of miniature figures. Additionally, digital disruption of the Warhammer franchise may cannibalize its physical products line. Based on our qualitative analysis, acquiring Games Workshop would represent a risky and suboptimal investment, since investing in miniature would consist of a step in the past, misaligned with Bandai's long-term goals to become a company shaping the future. I'll now pass it on to my colleague, Lukas, who will walk you through the financials of the deal.
Thank you, Pietro. So, from a financial standpoint, Games Workshop shows us the following features. Compared to its peers in the board games/miniature market, Games Workshop truly has outstanding margins. So how do we value Games Workshop intrinsically? Looking at 3 scenarios, we focused on a realistic scenario, which for example included a terminal growth rate equal to the risk-free rate of the UK, which stands at 1.42%. The choice of the realistic scenario is due to the possible digital overhaul, as well as the possible inflation of the market due to the pandemic and the recent streaming hype around board games. When looking at this scenario, we get to an intrinsic value of £126 per share, which was 64% higher than the actual market value. Different equity research analysts also underline our thesis. But while it does sound extremely appealing to private investors, this conclusion does not yield to a great outlook for an acquisition. But why? Eventually, the sell side will do their own financial due diligence and come to a valuation that is in line with or even above ours, which will make the acquisition more costly and less attractive. If Bandai decided to do the acquisition, creating value through this deal will be very tricky or even impossible. Why? Well, when looking at the synergies, we get to a wide range of 51 to 681 million pounds in possible synergies, while the upside synergies highly depend on an improvement of the logistical and production factors. As previously stated, there is a high uncertainty about the upside margins, since the seemingly great margins of Games Workshop might solely be based on their IP. Even if we considered the upside synergies, we would still only barely create value while taking an extremely uncertain position without considering a high valuation of the sell side. So, is the deal feasible for Bandai? Based on Bandai's great financial structure, namely having net cash, Bandai could acquire Games Workshop in a mixed offer of 60% cash and 40% shares, while maintaining a solid credit rating and without giving a blocking minority to former Games Workshop shareholders. All in all, taking both financials and the strategic fit into consideration, Bandai should not acquire Games Workshop. But we have a solution for you. Marc will now present our findings as to why you should acquire Square Enix.
To align with the long-term goals and your vision, namely creating and being prepared for Metaverse, Bandai needs to focus on a technologically supplementary acquisition with an explicit focus on VR or AR capable companies. Without an acquisition, Bandai would need to massively invest into developing the necessary knowledge themselves. This is exactly why Square Enix is an outstanding fit for the long-term goals of Bandai. Square Enix has the necessary VR capabilities to help Bandai in the long run. Just to show a little of their technological prowess, they have already created a VR version of Kingdom Hearts, and they have invested actively in NFT technology. To add to your excitement, we also wish to reinforce the necessity of why you need to invest in your future, the future of the video game industry and the Metaverse. Effectively, the video game industry is expected to grow at a compound annual growth rate of 11.9% to reach $240 billion by 2026. It must be noted that growth, fueled by the pandemic and mobile gaming, has already been severely underestimated in the past. Additionally, the video game industry is experiencing consolidation as companies thrive to acquire the capabilities to compete for the future Metaverse world. We can cite the January 2022 acquisition of Activision Blizzard by Microsoft for $69 billion. This acquisition was justified by the need of the acquirer, competent in VR technologies, to acquire the target for its extensive IP library. Understanding that the Metaverse is expected to grow at a compound annual growth rate of 13% to reach a market size of $1.5 trillion by 2030, not investing in it would be a slow suicide. The Metaverse will change the way society consume, socialize, and play. Bandai must capitalize on this opportunity today. Now, the financials of Square Enix obviously play a major role. With a conservative approach, we get to an intrinsic valuation of £4.7 billion, which is roughly 11.3% above market cap. Synergies also play an important role in the deal. We assume that with a combination of the two companies, the combined EBITDA margin could be increased to 19%, which compared to the industry average of 27.1% seems like a realistic approach. This being said, with a value of £922 million in synergies and the current market cap paired with a 21.5% premium equaling the Japanese average in 2018 for the entertainment industry, we would end up with an acquisition price that is roughly 9% below the expected value. Most importantly, our break-even point would be reached with a 32.8% premium. While the financials are looking good, Square Enix's most important features are not its attractive numbers, it's rather the strategic and operational fit that we mentioned before. Board of Directors, we hope that we've been able to convince you of the grand opportunity Square Enix presents for Bandai Namco. Square Enix's Metaverse capabilities, without mentioning its expansive IP library and international presence, will propel Bandai to your future. With Square Enix, Bandai will get the best of all three worlds, allowing Bandai to be on track to achieve your vision. So, we recommend you to acquire Square Enix. With this acquisition, you'll be able to create a world fun for all in the future. We thank you for your time and we look forward to answering your questions during our next meeting on April 23rd.